conservation easements. Conservation easements, it's a tax planning vehicle that is out there that I would not recommend anybody engage in because it's 100% audit. If you engage in a conservation easement donation, you're going to get audited, and the government's going to go hot and heavy on you. There's such a huge risk that you got to look at the benefit and say, okay, how much benefit am I going to get to that? So let me give you an example of what a conservation easement is. A conservation easement, and they're usually bundled. That is, one person doesn't do it. There's let's say a group of 20 that does it. So someone will go to you and say, hey, we're going to get a swath of land in Georgia, and you give me $1 million. We're going to go get this swath of land for, let's say, $5 million. We're going to have another $15 million in the bank, and then we're going to do other things to potentially develop it. But we're going to go to get a valuation expert, and the valuation expert is going to be asked, if we were to develop it as a mining operation for quartz or, let's say, housing development, how much would it be worth? And so the valuation expert, just like an art appraiser, says, well, I've looked at it, and if you were to develop it as a mining operation in Georgia, it would be worth $100 million. Well, what have you done, Ryan? You've invested $1 million, and you're 1/20th investor in this opportunity. The $1 million is now what? If it goes, let's say it goes to, what did I say? Let's say 100 million. It's a 5-fold increase in valuation. So now instead, for $1 million, you've got a $5 million valuation to your share. Now what they do is you've got a $5 million share. The entity then decides not to develop, but donate it to a conservation conservancy, some nonprofit that says, I'm not going to develop it. They donate the land and say, we will donate it to you with the promise that we will not harm the land, and you hold on to it. So now, just like you would to Goodwill, they've donated to a nonprofit. The nonprofit then gives a receipt for the value, which is what? Not 20 million, not 1 million, but 5 times. You then take the amount and you claim it on Schedule A as a charitable contribution donation for $5 million. You've spent $1 million. You take a $5 million deduction and you report it as a deduction on Schedule A. Now the IRS looks at it and goes, what do we have? What does the IRS have? They have an appraisal report from an expert on land, which the IRS is not. And it says you donated something that you paid $1 million, but actually you have $5 million. Is that legitimate? Well, yeah, that's the question. Is that legitimate? So now it's got to be tested. So for the IRS, once they get it, they've got to test it, which means that they've got to go hire an expert. They've got to determine whether this valuation is really, truly legitimate. And without speaking to whether it's legitimate or not, you could see the potential harm to the tax system. Mm-hmm. That seems risky, right? That's on the look of it, because it just flipped from the year of investment in 1 year, let's say 2021, to 2022 or 2023. Within a couple of years, your $1 million investment went up by 5-fold. Some of these investments, they went up by 20-fold within a year or two. So you could see it looks really bad. So now a tax attorney like me looks at it. What do? I look to see is being audited. Well, audits are not public, but what's being litigated, news reports, what Congress is doing. I look at the landscape, and I would tell you, Ryan, I see the tax benefit, but the risk is monumental. So what would I recommend that you do? Don't proceed. Right?
It sounds like these things happen a lot.
Yeah, there are hundreds and hundreds of these cases pending before the U.S. tax court now. If you just Google conservation easement IRS, and you will see that certain valuation experts have been indicted. I think one was convicted, one or more have been convicted. For some reason, a lot of these are in Georgia. I don't know why they're in Georgia, but they're in Georgia. it's 100% audit. That is, if it's shown on your return, you will be audited. And
Automatic red flag.
automatic red flag. And I've had those issues when I was a counsel attorney. I hated them because it looks so bad. Now, you invest $1 million, and the next year or year and a half, it becomes a $20 million valuation. It's like, wait a second, does that seem a bit too good to be true? So, if it's in the gray area, yeah, the tax law is difficult. If it's in the gray area, sure. So, there are certain parts where the law can't answer every question, but on the face of it, it seems so egregious